What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines, your weekly wrap-up of what's been happening in the news, what we've been writing about here on The Advisor. Ben, how's your week been?
Yeah, pretty good. We're sending the February mag.
Sending the Feb mag.
Sending that to the printer this week, so just doing our final bits and pieces. But
busy writing the features, getting all the print stuff done. It's always fun putting the magazine together, but the deadlines do creep up on you. And then,
deadlines are scary.
Yeah,
fun
deadlines
aside
are scary.
from that.
They're a real thing. And we have a new person joining us today. Charlie, welcome. A new journo on The Advisor. First week down. How's it been?
Yeah, very good. Thank you for easing me into it. But a lot of news on the news front. It's good to jump into a little bit of a different field for me, that being mortgages and brokers. Very interesting.
Yeah, because you were writing about mainstream news before. You're a mainstream news reporter. So now coming into the industry, all the dynamics of what's happening in broking. You've really had a baptism of fire this week as well because everyone's been back. It's been a big week for news.
Yes, absolutely.
Have you learned much this week? Hopefully.
I think I've learnt more this week than I have in many other weeks, which is a really good thing. Like you said, baptism of fire. There's no other way to really do it. To just immerse yourself and soak up as much knowledge as you can in a limited amount of time. But it's all art of repetition. So the more you write about something, the more you sort of soak up the knowledge.
Exactly. So Ben's been struggling with not even struggling, he's been excelling. Ben's excelling with the deadlines. And you've been dealing with on the print side, but you've been dealing with the daily deadlines of the news as well. So
I'm used to that.
The pressure of getting stuff done. And what a week to join though, because we've had some really big news come through. Also, Charlie, you might not know this, but we had this week launch, sort of, soft launch, the first new resi aggregator in over 15 years. So what a time to be writing about the mortgage and finance broking industry when we finally got a major new player. Now, for anyone who's been obviously in the industry and following this for a while, you might be thinking, who was the last major aggregator to launch in the resi space? And there was some contested information on this. So we thought it was Outsource Financial in 2010, but it turns out it was Finsure in 2011. So we're kind of saying both of them because they have very similar start times. So the last time that, the major resi aggregator launched was around 2010, 2011.
Big news.
And this is the form of Viking aggregation. So Viking, as most people might know, launched a couple of years ago as an asset finance aggregator and has been building out its resi and commercial aggregation offerings. And this week started onboarding their first brokers. So they're kind of doing a bit of a soft launch now, onboarding everyone. I think they expect to be fully up and running kind of by February. And they're suggesting that by the end of this year, they'll have 600 brokers aggregating through them.
Are these going to be brokers from competitors or new to industry brokers?
Well, this is the question. Where are they coming from? So I think, this is just on the resi and commercial side. If you add in the 400 or so they have on asset, it'd be about 1,000 brokers aggregating through them. So I think the people that they're targeting aren't necessarily brand new brokers. So I think they may be looking, where else can we get these brokers from?
Poaching, hey?
Poaching a little bit, but they obviously wouldn't say they're poaching. No. Encouraging people to join them. So they're kind of doing, I talked to Clive Kirkpatrick, who many people might remember used to be the general manager of Val Aggregation. And he's had a lot of businesses and experience over the years since then. But he's been brought in to kind of head up these new resi and commercial offerings. He's also brought in Stephen Moore, who again people might remember because he used to be the CEO of Choice Aggregation and part of the NAB group, which then got bought by LMG. So two really experienced aggregation leaders up here heading up Viking to really onboard lots of people. And I spoke to Clive about it and was being like, this feels like a really big job and kind of a headache. We know from having talked to aggregators over the years, there's not really a huge amount of margin in aggregation. Lots of people kind of looking over the last few years in the aggregation space about, diversifying their revenue stream. So we've seen a lot of ags launch white label and securitization arms to try and bring in money that way. It's interesting to see a new player come in. And they were kind of talking about how difficult it's actually been. Because if you think about the fact that most lenders probably haven't had to onboard a new aggregator for over over 10 years at least.
It's a long time.
A long time. A lot of them are a bit like, do we really have to bring in a new one? Like, it's all these checks, getting the lender partnerships on, sorting out all the lender contracts, getting your commission portal set up, talking about, the contracts for the commissions as well.
Yep.
A lot of paperwork and admin that goes on behind the scenes. So I think that was actually a big part of the delay, in fact, that they have been working towards launching for several years and finally starting to do it. A lot of the issue has been getting everybody up and running. So the lenders, as I said, the contracts done, getting the commission structures done, getting the technology built, building your own portals is a lot of time and money as well. And they've got to do it for resi and commercial, so require kind of different things. But according to Clive, all done now, pretty much. The tech is still kind of, being rolled out. But by February, I think everyone will be kind of tying everything up with a nice bow, and they'll be ready to hit the ground running with Raven, which is their portal. And interestingly, I asked them why it was called Raven. Do you guys know anything about Viking folklore?
Oh, so it must be some sort of Nordic.
It's a Norse thing,
Yeah. Oh, that's interesting.
So Raven.
I don't think I'll dabble.
You're not going to guess.
Big reveal. Come on, give it to
us.
us.
So apparently, I haven't fact-checked this, but Clive told me that it's because a raven on the battlefield was a sign of good luck for the Vikings.
Okay.
And so they have called.
So they've got serendipity on this side.
Exactly.
Good.
So they're going into battle with their raven portal, which, by all accounts, is obviously kind of really bringing together lots of different tools and technology, but also building their own, particularly on the commercial side, I think, a really cutting edge system, because we know already there's loads of portals out there. I think for their resi side, they're using Sales Tracker 2.0. On the asset side, they've got Financeable, and I think they're using UX maybe on that side too. But the commercial technology system, as many commercial brokers will know, has been way behind the times for most aggregators. No one's really nailed it. So I think Viking are like, this is where we're going to excel.
You were mentioning that to me as well.
Commercial tech.
When I started, that there was a bit of a hole there in commercial.
Yeah, so. I mean, I would not be surprised if people now still actually hand a physical paper document over to a lender and like, here's a commercial loan, because it's like really not digitized, or at least not systemized. So Viking is saying we're going to be really nailing this space, and that's what we're very excited about, is not only having a really great technology system for commercial brokers, but also having one portal where you can see everything. You can see your resi stuff, you can see your asset finance stuff, you can see your commercial stuff in one space. So yeah, very exciting to see a new aggregation group launching. I'm looking forward to seeing how that progresses over the next few months as we see more brokers join them. They are part of the Nationwide group as well, which are sort of known for their asset and car finance. Yeah. So I imagine a lot of people will be thinking about, well, maybe I should diversify into commercial and resi if I'm already writing asset. So yeah, it was big news this week. Got everybody reading about it. Lots of people talking about it. I've had so many questions coming through from readers, but also I think from people in the industry just really curious about having a new aggregator and being like, wow, it's been so long since we had one. So that's been quite exciting for everyone. Do you think when you look at the aggregation space, do you think there's going to be like much disruption in this space this year, given the fact we've got new players coming in?
It's hard to say, I guess. Because you think of these brands, they're kind of like, at least from the consumer side of the industry, they're the big household names. They're the sort of the brands people recognize.
The big brokerages,
big brokerages. And they're kind of like, they've got a sense of ubiquity in terms of the industry. So yeah, it was interesting to learn that this is the first one in 15 years to be set up. I don't know if that means there's going to be big changes, but yeah, just something to keep an eye on, I guess.
I'm really curious to see as well the broker numbers, because the biggest brokerages in the country at the moment that we know obviously are the groups. So like LMG Loan Market Group, which is about 6,000 brokers across Australasia. But that's obviously kind of formed of different formats. And then you've got the big one brokerage branded groups, the franchise groups like Aussie and Mortgage Choice. You've got, the independent aggregators like Viking will be, so it's not going to be branded. But you've got the Connectives, the AFGs, the Finshaws, thousands of brokers under those groups already. So it's already quite a lot of saturation in market. And we have seen, not so much recently, but probably the last 10 years, a huge amount of consolidation. Plan Choice Fast that used to be owned by NAB, that Stephen Moore used to work at. They got bought by LMG, they consolidated. Smartline got bought by Mortgage Choice and they consolidated. Lendy and Aussie have been brought together. So now Aussie's their primary brand. So we've seen a lot more consolidation. So it's just curious to see a new player come into markets. It's exciting. I'm excited by it. I'm looking forward to seeing what will happen. Talking of that, though, I mean, we're talking about aggregation here, but I did mention a couple of the big brokerage brands, like the franchise brokerage brands like Mortgage Choice and Aussie. And we have seen in the brokerage space, again, a lot of consolidation recently. So people either merging together or acquiring people. Charlie, some of your first stories this week were around...
hot off the press.
Yeah, acquisitions. Who's been doing what?
So quite early on in the week, we had Empower Wealth, who specialise in property and investment advisory. They revealed that they'd purchased brokered real estate home loans, a regional borrower, a notable name in regional Victoria, Ballarat.
Yeah.
And the acquisition was completed on 24 December, so Christmas Eve.
Happy Christmas, yeah.
They kept it under wraps until the new year. And so its founder, Paul Ballinger, and his business partner, Grant Newell, they will be joining the Empower Wealth team. It will be operating under the business arm of Empower. And, they stress that, it would still trade under its well-recognised name, powered now by Empower Wealth Group.
So, sorry, what was it called? Real Estate Home Loans?
It is called Real Estate Home Loans,
Yes.
REHL, Ballarat-based brokerage,
Great
founded
name.
in 2000. So
in 2000.
it's a long-standing firm as well, and Empower stressed that when they purchased it as well, and they announced the purchase and the acquisition and the merger, and they specialise in
Real estate home loans.
Yeah, but also also educating and providing literacy
Financial
around
literacy.
loans as well, and trying to gear up their clients to know what to spot and know what to look for. So Empower seems to think that will enhance, bring over that expertise and knowledge and kind of endow that to their clients.
Seeing more and more sort of mergers and acquisitions in this space as well. What do we think is sort of driving it? Is it just competition in the industry, or
I think partly, yeah. I mean, spoiler alert here, but I've recently, on the February edition of the magazine, been writing the top 25 brokerages ranking, which will be coming out soon, talking about who's the biggest players. And in that feature, I was actually really interested to be like, you know what, about 5 different brokerages in this top 25 brokerages ranking has either bought someone or merged with somebody else.
Yep.
And I think partly it's because of people wanting to really broaden their footprint across the country.
Yep.
So like, Empower, they don't have an office in Ballarat.
No.
Not many people do, to be honest. But I think having like a really strong regional stronghold is really good. They're really embedded in the community. They do a lot of face-to-face work. As you said, they're real estate home loans, do a lot of financial literacy work as well. So they're really powerful community strongholds, these local brokerages in the regions. And I think a lot of brokers who own brokerages in the big cities are like, well, how do we get out there without having to send someone and learn the ropes and learn the community? Can we just kind of snap up someone who's already doing it really well?
Yeah. Which is clearly what's happened.
Clearly what's happened here. And I think similarly, with other brokerages, we had Innovate last week announced that they'd bought one in Adelaide.
Yep.
There was been Alec has opened up new offices and are going to be expanding, I think, with a franchise model, they were saying.
Yep.
As
Due to
well.
release later. Or the middle of this year.
Yeah. And they're both, again, in the top 25 brokerages. They're really big broker companies and really specialising in property investment as well.
Yep.
So I think like just seeing lots of people being like, well, we want to grow. We have maybe, a lot of support. Maybe we have some capacity as well. Perhaps we've got brokers who could be doing more. So maybe we want to bring in some more business. So I think that's kind of been dealing with it too. But, increasingly also things like technology becoming a really big part of the broking landscape, and having enough reason to kind of invest in these technology stacks as well can be, we actually need to make it kind of worth our while in terms of having enough people using it.
Yeah, that's a good point.
Yeah, so I think a lot already in 2026. I think there's been 4 different, in the last week alone, acquisitions from the brokerage space. So I expect 2026 we'll see some more. And lots of people, trying to expand nationally.
Common theme, expanding nationally and also and regionally especially. I know that Empower, when they announced it, stressed and underscored the regional element of it as well, because they mustn't have had a major presence out in regional Victoria, and clearly there's a gap in the market as well for that. You know, people are now flocking to the regions. They're moving out of the big cities as well, and home prices in kind of regional areas are rising. So people are seriously looking towards that as an option.
And also from a property investment angle as well. I mean, traditionally we've seen Melbourne being a lot of people looking at the apartments in Melbourne, but I think traditionally now we're seeing a lot more people going, I want to invest in the regions, and I want to talk to someone who knows the region where I'm investing in as well. So it's an interesting move from Empower, yeah.
Absolutely.
We're going to take a quick break here. When we come back, we'll be talking about, again, because it's the beginning of the year, all of the new appointments that we've been seeing, a raft of new year, new me type stories coming out from the banks with lots of new appointments, and we'll get into them just after this message. Back with a bang this week. I feel like everyone was properly back this week. Last 2 weeks have been sort of slower on the news front. This week was boom, everyone's back.
There's no ambiguity this week.
Absolutely not. Everyone is back and catching up. And one of the big stories that came out that we flashed across the titles was AMP announcing a new CEO, which was exciting news. Alexis George, who's been the CEO over at AMP for the last few years, will be stepping down from full-time executive roles, and she'll be moving out of the AMP CEO position and welcoming in Blair Vernon, who's their current chief financial officer.
Yep.
I always think it's interesting when CFOs become CEOs, because you'd think there'd be two quite different skill sets needed. Like CFO is very much like in the detail, doing the kind of, the transformation or the money or the accounting type things.
Yep.
CEO is much more around like extroversion almost, like, sales and partnerships, and obviously still management, but they kind of feel like, to me, quite different roles. So I always think it's interesting when you see a CFO become a CEO. But Blair Vernon, who has been at AMP for a while, will be taking on the position as CEO later this year from the 30th of March.
Yep.
So he's got a couple of months to do the handover process with Alexis George. But interesting, we haven't had a new CEO appointment at a fairly big institution since, maybe Nuno Matos?
I think that'd be the most recent one.
That's the one first one that comes into my mind.
Yeah.
But yeah, obviously AMB not being a major bank, but pretty big player, and they've been doing some really interesting stuff recently as well. You might recall they did that 30-year interest-only loan that some people had raised eyebrows about. They've been, overhauling their broker portal recently. They've been investing a lot more in technology. They're trying to do a lot more kind of interesting things in the lending landscape, and I don't think we have heard the last from them. I think we'll be... spoiler alert, hearing from next week.
More to come.
Yes.
More to come from AMP. But yeah, really interesting to see that sort of appointment. And again, whenever we have a change in leadership, being like, well, what will they be focusing on? What do they want to be known as? What will their legacy be? And I think from Blair Vernon, if he's a CFO, maybe he'll be like, very sound financial management. That's what my legacy is going to be. What do you guys sort of think about, if you were going to be coming into a bank as a CEO, what do you think you'd be doing? Because Nuno, when he came in last year, pretty much overhauled everything.
I guess every sort of big bank is dealing with its own issues and sort of has its own different priorities. I guess, ANZ, it's sort of come out in the wash since Nuno's appointment that there are quite a few things going on at ANZ that he's sort of been working on in the intervening months. But big job too. And I guess it's interesting too, the dynamic between an internal hire and an external hire as well. But yeah, I think it would be tough, like learning all the key stakeholders, sort of driving change or making sure the shareholders are happy.
Yeah, and I guess as well from AMP's perspective, as I said, because we've been doing so many new things and they've been trying, like they've had this whole technology overhaul, it would really help having been in the bank already, like knowing and seeing all of this rather than having to come in and learn it all, like over at ANZ, like Nuno had to do at... and pretty much strip it all back and be like, where is this? What is this? What are you doing? Who does what? Like, having to learn it all. But I think probably positives and negatives of both, actually, being an incumbent.
100%, yeah.
But yeah, so if anyone doesn't know Blair Vernon, he's got over 30 years of experience in the finance space already. He's held a range of senior roles at AMP, including for a while he was acting CEO of AMP Australia. So he's had some form already. Okay. I think he held that position for about a year. He was also Group Executive of Transformation and the CEO of New Zealand Wealth Management. So he's got lots of senior leadership experience already. He's not just a CFO. And they were talking when they announced his appointment this week about the fact that he's obviously got a lot of experience about the seamless transition because it's an internal hire. But they did say, really he's got the right breadth of experience to lead AMP moving forward. And they kept talking about, the new phase of growth that we're going through. So I'm interested to see what does this look like? What does that mean?
You hear that very much so, that phrase come up often in all of these appointments that we've been writing about last week and this week as well. All of these companies and lenders, whether they be banks or non-banks, signalling new growth phases.
New growth, that's right. Because over on the non-bank space, Pepper Money launched a whole host of new appointments this week.
Yeah, it was a big poster board, really.
Yeah, I was reading that story. I thought it was a lot of appointments. So across the kind of country, really. Charlie, you wrote the story for us, for The Advisor.
I did.
What have they done? Why have they done it? Who have they got?
They've basically ramped up their East Coast teams across the major broking channels in the corridors of Queensland, Victoria and New South Wales under pretext of what they describe as a soaring appetite for alternative loans, and there's obviously very much data that supports that. They've announced broad upgrades to sales, support, leadership, credit teams to capitalise on a forecasted high growth period for alternative lending. And so firstly, in the string of new appointments, they've got new residential credit assessors in Queensland, New South Wales and Victoria.
I'm sure brokers will be super happy about that. Yes. They're like, yes, more credit assessors.
There was, again, a lot of emphasis on these operational announcements, being for brokers. And for the purpose to make brokers' lives easier. And they've also announced new commercial and self-managed super fund credit teams to what they say fuel faster innovation in product development and meet rising demand. So
from a broker perspective, I think as well, they've got some new BDM members.
Yes, they've got business development managers as well, and they've also got new state leads. So they've appointed a new state lead in New South Wales and Queensland as well. But the business development.
Who are the new leaders?
They are. I don't have that on hand.
So
at the moment.
I'll just add this in. So in New South Wales, we've got Vladimir Murphy Mulcahy, or Vlad, who was at Mortgage Easy. He's moved across now to Pepper to be the new New South Wales state lead.
That was Queensland.
Moved over from Queensland. I was thinking that. I was like, isn't he based in Queensland? To be the Queensland
I should know
lead.
that. I wrote the story.
Yeah, and Tony Wackham is the New South Wales.
New South Wales.
Yes, there we go. But also seeing BDM numbers, I think, across the board underneath them expand as well. There's Nikita Borg, new BDM and Queensland team under Vlad. You've got Keishan Sub. Keishan? I'm not sure how you pronounce that, sorry. Who's relationship manager, and Hridayat.
I don't know if I'm going to have a crack. I might leave that to you.
Hridayat Riday-Walia is a business support specialist. And again, apologies for that butchering of those pronunciations. I'm sure I got this wrong. In New South Wales, is Ivor Young is a new senior business development manager, and Alice Moniz in the BDM slot as well. So Georgia Constantinides down in Victoria. It's BDM, senior BDMs, Anthony Styles and Ison Portoglu as well. So big teams and lots of announcements of changes and things, and looking at bringing in people with lots of knowledge to really hit the ground running. And I think Pepper were basically being like, this year, again, we're expecting a huge year. And we've seen that in a lot of the data coming through from the last few months. 2025 really ended strongly. There was some recent AFG data showing us that AFG brokers, for example, wrote a record volume in the December quarter just gone, and they expect that to continue into this next few months and probably into the year as well. So I think all the lenders are preparing for a big year. And then one more appointment, but probably one that's maybe less interesting for brokers because it's not broker facing, but a new chairperson at Newcastle Greater Group. Who and what and when will they be starting?
So the new chair-elect is Darren Turner, who will be replacing Samantha Martin-Williams as a group's chair, and that will be finalised in March. He'll be taking over on the 1st of March. She'll be wrapping up on the 28th of February. So there'll be a very small transition
So Samantha
period.
finishes on the 28th and he takes on
He takes
1st.
over on March the 1st. But they stressed that, he was a Newcastle local, a proud Novocastrian. Novocastrian was how they put it, and they said that his past roles have included, strategy, governance, financial risk management, and he's also the chair on a number of other organisations, local organisations as well to the Hunter, including Hunter Medical Research, also Vale Group and Phoenix Health Fund. And he's also, in addition to that, got a number of senior roles in private, public and non-for-profit organisations as well.
I think it's interesting seeing these appointments where it's a group like NGM, for example, because, of course, you might remember they merged Newcastle and
2023.
In 2023. Yep. So they've had a little bit of time to bed that down now.
Yep.
I think, again, looking for the new phase of growth, bringing in new leadership, may have new chairs, but really looking at what's next for these mutual banking groups as they all consolidate their mergers that we've seen take place over the last few years. I feel like in 2024 and 2025, you probably wrote a mutual merger story like at least once a month.
Yeah.
Like there was so many going on, but those are really
theme.
starting to like bed down. So I think seeing new appointments not surprising given the fact that now they've kind of the dust has settled. They'll be like, what's next?
Yeah, I guess it takes a bit of time to actually be within that sort of merged entity to just sort of decide what they actually really want it to suppose.
Yeah.
You wouldn't really know until it
you've
sort of
actually
comes
seen
together.
it.
So.
But it sounds like they're still keeping their roots of the Newcastle Novocastrian vibe with a new NGM chair from that area. We'll take a quick break here. But when we come back, we'll be talking about all eyes on the economic data and what the Reserve Bank of Australia is going to be doing next, because there's only a few more weeks to wait before we've got the first rate decision of 2026. And we'll get into that just after this. So, Charlie, poor thing this week. You've been delving into all the macroeconomic data. We've had a whole bunch of it being released, whether it was dwelling approval data or construction cost data.
ABS has been hot off the press.
They have been catching up this week. Yeah,
very busy January. You don't hear that often. But enter January, they have been busy bees.
Statisticians just absolutely catching up. So this week, the things that we were really looking at, aside from the construction cost data and the dwelling approval data and the completion data, has been unemployment data.
Yes.
And this has been something that all of the majors have been talking about recently because of the importance of unemployment data and inflation and what that means for monetary policy in Australia.
Yep.
There was a bit of a shock this week there, wasn't there?
There was, yes. All the major banks were caught off guard. And they stressed that in their replies and commentary. But in yesterday's December 2025 jobs data, there was a surprise, robust increase in jobs. And so the unemployment rate eased from 4.3 to 4.2% in trend terms. We had 24,800 people enter the workforce.
Yeah, that's a lot.
In that month, and the number swelling to 14,686,000 strong. So a 0.2% monthly rise and 1.2% yearly gain of 180,000 as well. So it might sound like it was just a small kind of result, but it wasn't, because it was off the mark of the RBA's forecast as well. They'd put it down at 4.4.
So RBA expected 4.4 employment for December.
They did. RBA forecasted 4.4, and it came in at 4.2. Or
4.1.
Yes.
Depending on which way you're looking at it. But yeah, that is surprising. And I think looking at the data, they were talking about the fact that it was a lot of young people really coming into the workforce, which also again surprised me. I don't know if that's like just because it was December, so maybe it's loads of people taking on like summer jobs.
Casual work.
Yeah, casual work. I wonder like how much of that is actually going to stick.
Westpac did try to point out that not to read too much into these kind of month-to-month figures, especially the end of the year at December. They stressed that, the youth rate might be high, but that's not indicative. And we shouldn't read into that as a consistent long-running trend.
Yeah, because most kids, I was going to say, but young adults probably on the summer holidays looking for a job for the summer.
Yep.
So it might just be they're only in December,
or
January.
off on uni, picking up some casual work
Yeah.
before uni commences. And I know a lot of people I know just pick up a job at a restaurant or a cafe on the month of November, December, and then it's either back to university or whatever they might be doing. But yeah, a common theme was a surprise from all four.
So what does this mean now? Because if unemployment is worse, better. Employment is better.
Employment is better.
Stronger. So what does that mean for then the economy? Because surely then they're kind of going to argue, well, if more people are employed than long-term average, then they're going to have more money, and that means more money's coming into the system.
More to spend.
What does that mean for inflation?
Exactly.
So what are the economists at the bank saying now? What are they looking at, and what do they think that will do to the cash rate?
The one commonality among the majors is that they're hinging all their bets on the CPI data that's set to be released on the 28th of January. They think that's really going to seal the deal for interest rates, and the RBA's thinking on interest rate, whether they will hike or whether they will hold.
Yeah.
You've got absolutely no one in the major market predicting a cut.
Yeah, they've all scrapped that now.
Yeah, exactly. Westpac was the kind of last to phase that out at the end of last year, and they stressed that in their response to these jobs figures. But I think NAB has come out, and CBA as well, as the most forthright in predicting hikes.
At least one, but probably I think
two.
they're the two.
Yeah, NAB is saying that February and May, they believe that there'll be a 0.25 hike at both of those board meetings.
Yeah.
But yeah, NAB stressed that the figures came in under the Q4 RBA's unemployment forecast, and they think that it'll just revive tightening talk ahead of the meeting.
The meeting on the 3rd of February.
The all looming meeting. So yeah, NAB has said it'll expect a hike in interest rates in Feb and May, as I just said. ANZ has not been as transparent in their thinking. They've basically said they think the Reserve Bank will hold if trimmed Q4 CPI came in at 0.2, and that they would hike if it came in at 0.9%. So ANZ is really hedging all of their bets on those CPI figures, but they've come out a lot more hawkish. They labelled the 4.1% result as quote unquote unexpected.
It's very economist understated there. Oh, that's unexpected.
Yeah.
But yeah, okay, so that's a good thing to look out for
Very
on
much
Wednesday
so.
the 28th when we get the CPI data. Basically, from what I'm hearing there is if it's 0.9, they're going to be like, yeah, it's a hike. If it's below 0.9 on Wednesday, they're expecting it to hold.
Yep.
Okay.
And CBA was in NAB's camp, and they basically went a step further and said, sure, our view is we expect rates to increase to 3.85, but we'd also expect it to remain there for, quote, the foreseeable future as well. So it's a big statement from NAB, from CBA as well, I think.
I think as well, looking at mortgage rates, I mean, we've seen them still sort of at pretty okay levels. I mean, depending on who you talk to, but from long-term averages, still below 6% most people. So I think now we might start seeing people fix a bit more if they're starting to worry about rate hikes.
Yep.
Although we have already seen fixed rates starting to move up. Whenever they adjust their forecasts, all the rates change anyway. So we have already seen them starting to go up, but I think we might start seeing that fixed rate chatter come back again because they've been barely anyone fixing rates. I think something like 98% of people are variable at the moment. So I think with rate hikes on the forecast for this year,
A lot of nervous people.
Borrowers feeling a bit nervous. And, we still know there's loads of people buying. We've got new schemes being launched, Help to Buy, out there now.
Mortgage demand is up.
Yeah.
I wrote a story this week that shows that mortgage demand is up and is accelerating. And inquiries are accelerating, and refinance is also those that are already in the market and looking to shop around is also accelerating as well.
They're not going to get a great deal though.
No.
Yes.
No, they're not.
Yeah.
There's a lot of activity to try and get in before this incoming meeting.
It's interesting. It's not that long ago we seemed like we were just part of a rate cutting cycle.
I know.
Yes.
I miss those times.
But yeah, I guess, the data is a bit of a movable feast and things change. And
And I know, I always feel like it's our job to kind of go through all this data and read what's happening and look at the analysis and talk to the economists. But this week I was like, so much macroeconomic data. I was a bit like statistics coming out of my eyeballs. I was a bit like, it's everywhere. But yeah, so I think this is we've done the hard work so you guys don't have to, but really looking at, well, what does this all mean? And I think it's interesting hearing from those major bank economists about what they think. And most of them, as you say, keeping an eye out for Wednesday, but being like, probably going to be a hike in February. No. But the RBA meets, on the 3rd of February. So they have those 2-day meetings. They announce the decision on the second day. I think the ASX rate tracker as well went up quite substantially after the unemployment data came out yesterday. So their markets are pricing in a Feb rate cut. I think it's about 50-50 now. So we'll be obviously writing all about it as we get closer to the mark, and obviously on Wednesday when we get the CPI data. But looking forward, it's a long weekend. Australia Day coming up. I actually have some friends being made citizens on Monday, which will be nice.
Oh, nice.
So it's exciting.
Very good. Although
it does always feel weird when English people get made a citizen on Australia Day. You feel a bit like, soz about this. A bit weird. But I'm going to be celebrating with them over the weekend and hopefully getting some more sunshine. We had some awful rain last weekend, so I'm looking forward to hopefully some more beach time. What are you guys up to for the long weekend?
I'm not too sure. Hopefully go for a swim at some point. I've got a new waterproof splint. So it's exciting. But probably not too much.
Stay in the pool.
Keep an eye out for those fins.
Yes, that's true.
Stay away from the harbour, as they keep telling us.
Charlie, how about you?
I think I've got some social plans on this coming long weekend, which is always exciting. Seeing some friends that I haven't seen in a long time. Some birthdays, some friends from Canberra coming up, or as they say, coming down. I've never understood that.
Across,
coming down. The Melbournians say that as well. That really catches me off guard. So it should be good to
have a little break,
catch up and take a breath. Although I can't really speak much. I've only been in the job for a couple of weeks, so I think you guys will be getting a well-deserved break as opposed to me. We've been, like you're saying, there's a lot of news to process.
Yeah, lots of news. So, I think obviously on Australia Day we also have the Australia Day Honours List released, so we'll be having a look through that, seeing who's been, granted any kind of honorary title from the finance industry.
Yeah.
And back on the tools on Tuesday. So if any of you listening have any stories, if you're doing anything interesting, if you've got any gossip for us, do feel free to reach out and let us know. We'd love to know what all is. You can reach me at editor@theadvisor.com.au. Of course, check out the Advisor website. You can find all our contact details on there as well. And we hope you all have a fab long weekend. Happy Australia Day if you celebrate. And to those who don't, happy long weekend. And we'll be back with you next week for another episode on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.